Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close, educational look at an expert advisor called Swing Level Reclaim. This is a price action strategy built around support and resistance, with a relative strength index momentum filter layered on top. Over the next few minutes, you'll learn how it maps market structure, how it reacts to false breaks of key levels, and exactly how it decides when to enter and when to exit a trade. Let's get started, and remember, everything here is for education only. Let's start with the big picture. Swing Level Reclaim is a price action expert advisor for MetaTrader 5. At its core, it does something traders have done by hand for decades. It identifies meaningful support and resistance levels, and then it watches how price behaves around them. The difference is that this code does it automatically, bar by bar, without emotion or fatigue. The strategy builds its map of the market using fractal swing pivots. A swing low becomes a support level, and a swing high becomes a resistance level. But rather than simply buying at support or selling at resistance, this approach focuses on a very specific event known as a false break, or a sweep and reclaim. That's when price briefly pushes beyond a level, takes out the orders resting there, and then snaps back inside. It's a pattern many discretionary traders watch closely. To confirm that momentum is actually turning, the EA adds the Relative Strength Index, a classic oscillator. For a long, RSI needs to be turning upward. For a short, it needs to be turning downward. This momentum filter is designed to help separate a genuine reversal from a level that is simply breaking down. Risk is handled mechanically. The average true range, or ATR, measures recent volatility and is used both to limit how far price may penetrate a level and to place the stop loss a sensible distance beyond the swept extreme. Targets use a fixed reward-to-risk multiple. Because it is symbol and time frame agnostic, this EA can be studied on whatever chart you load it onto during backtesting. It tends to appeal to traders interested in structure, liquidity, and mean reversion style setups. As always, remember that every strategy experiences losing trades, and nothing here is financial advice. Now let's walk through the mechanics step by step, exactly as the code does it. First, the EA builds market structure. On every completed bar, it looks back over a window defined by the swing look-back parameter, which defaults to 3 bars on each side. If the bar in the middle has the lowest low of that window, it's confirmed as a swing low, and that price becomes the active support. If it has the highest high, it becomes the active resistance. Each level is time-stamped with the bar count, so the EA knows how old it is. Second, the EA manages the lifespan of those levels. A level stays valid only for a set number of bars, controlled by level expiry, which defaults to 60. More importantly, if price closes decisively beyond a level by more than MaxPenetrationAtr times the current ATR, the EA treats that as a real break and retires the level. This is the key rule that keeps it from fighting a genuine trend. Third, the EA looks for the sweep and reclaim. Over the last few bars, set by ReclaimBars, it records the lowest low and the highest high. For a long signal, for things must line up. Price must have wicked below support. That penetration must be shallow, within MaxPenetrationAtr times ATR, so it's a controlled wick and not a collapse. The current bar must close back above support and close higher than it opened, a bullish candle. And RSI must be higher than it was on the previous bar, while still sitting below its upper threshold of 65. When all of those conditions are met, the EA signals a buy. The entry is taken at the ask price. The stop loss is placed just below the swept low, buffered by ATR times the stop multiplier. The take profit is set at the entry plus the reward to risk multiple times that risk distance, which defaults to 1.8. The short side is a perfect mirror. Price wicks above resistance, but closes back below it on a bearish candle. RSI is turning down while staying above its lower threshold of 35, and the stop sits just above the swept high with the target a fixed multiple of risk below entry. Finally, the EA allows only one open position per magic number at a time, so it never stacks trades on the same idea. Every decision is mechanical, repeatable, and fully defined in the code. Let's read the actual MQL5 code the expert advisor runs, just as you'd see it in MetaEditor. At the top are the input parameters. Swing lookback sets the fractal half window. ReclaimBars defines how many recent bars form the sweep window. MaxPenetrationAtr limits how far a wick may push beyond a level. Level expiry controls how long a level stays valid. Then come the indicator settings. RSI period, with an upper threshold of 65 and a lower threshold of 35, and ATR period. ATR SL multiple is the volatility buffer added past the extreme. Reward risk is the target multiple, and lots is the fixed position size. Now look at the long block. The condition checks that support is fresh, that the lowest low of the window dipped below support, and that the penetration stayed within max penetration ATR times ATR. It also requires the current bar to close above support, to close higher than it opened, and for RSI to be rising while below the upper threshold. When every part is true, the code reads the entry at the ask, sets the stop just below the swept low minus an ATR buffer, and calls trade.buy with a take profit at entry plus reward risk times that risk distance. The short block is the mirror image. It checks resistance is fresh, that the window's highest high poked above resistance within the same ATR limit, that the bar closed below resistance and below its open, and that RSI is falling while above the lower threshold. It then sets the stop just above the swept high and calls trade.sell, with the target the same reward to risk distance below entry. Clean, symmetric, and fully rule-based. Let's bring this strategy to life on a chart. What you're looking at is an illustrative EURIS sequence, with the candles up top and the relative strength index in the panel below. I've drawn two dashed levels, a swing low support at 1.0840 and a swing high resistance at 1.0895. Watch how the strategy treats each one. We begin on the left. Price is drifting lower, candle after candle, pulling down toward that support line at 1.0840. As the third candle prints, it carves out a clear swing low right at support, and the next candle bounces up off it. That bounce is what confirms the level as a valid swing low support. Notice the RSI down in the panel. It has slipped toward its lower region and is just beginning to curl upward as buyers step in. Now the setup takes shape. Price pulls back toward support one more time, and here comes the important candle. It wicks below the support line, dipping to a fresh low beneath 1.0840. For a moment, it looks like a breakdown. But this is exactly the false break the strategy is built around. The penetration is shallow, within the max penetration ATR limit, and crucially, the candle closes back above support and closes higher than it opened. At the same time, RSI ticks up from the previous bar while staying below its upper threshold of 65. Every long condition is now satisfied, and the buy entry marker appears on that reclaim candle. Look at where risk is defined. The stop loss sits just below the swept low, a small ATR buffer beneath that wick. So if price genuinely belonged below support, the trade is closed quickly. The take profit is projected upward at 1.8 times that risk distance. From here, price does what the setup anticipates. The next couple of candles rally firmly, momentum builds in the RSI, and price reaches the take profit target. The long example is complete. Now the chart shifts to the short side, and the logic flips perfectly. Price has rallied up and is now pressing into resistance at 1.0895. A candle forms a swing high right at that level, and the following candle pulls back, confirming resistance as a valid swing high. In the panel, RSI has climbed toward its upper area and is starting to roll over. Then comes the mirror of what we saw before. Price pushes back up and wicks above resistance, poking past 1.0895 to take out the stops resting above. Again, the penetration is shallow, within the ATR limit. The candle closes back below resistance and closes lower than it opened, a bearish reclaim. RSI turns down from the prior bar while staying above its lower threshold of 35. That completes the short conditions, and the sell entry marker appears. Here the stop loss sits just above the swept high, again with an ATR buffer, marking the point where the idea would be wrong. The take profit projects downward at the same 1.8 reward to risk multiple. Price follows through. The final candles fall away from resistance. RSI keeps sliding, and the move reaches the take profit target below. The short example is complete. Step back, and you can see the symmetry. In both cases, the strategy waited for a level to be swept, demanded that price reclaim the level on the close, asked RSI to confirm that momentum was turning, and only then signaled an entry, with risk defined the moment the trade was opened. It's a patient, structure-based approach. And of course, on a real chart, not every sweep reclaims, and not every entry reaches its target. Losing trades are a normal part of any strategy. And that brings us to the end of our breakdown of swing-level reclaim. Today we covered what the strategy is, how it maps support and resistance from swing pivots, how it trades the sweep and reclaim of those levels, and how it uses RSI momentum and ATR-based risk to define every entry and exit. We also read through the actual MQL5 code and watched both a long and a short example play out on the chart. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found this helpful, please like the video, leave a comment with strategies you'd like analyzed next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.